Hi there, Serial Trader here. I want to do an update on the major US indices, and we'll start here with the daily chart on SPX. Now it looks so far like we're just working this ABC down, so it doesn't look all that threatening. And also just from kind of a classical charting standpoint, let me just delete this for a moment. You see this previous high we made here at 32.33.13, so that was formerly resistance there in June. Well, look what that's now turning into, at least so far. If I throw a little horizontal line up at that level, that former resistance now starting to act as support. We had a nice bounce off that right near that level today. Pretty good reversal day. So I just thought I'd point that out. And I mean, this is your typical three-wave zigzag decline. And if we just now remember, I kind of wanted it to see in the last update video there, I wanted to see come into this previous fourth wave range, which was basically anywhere from this high to these two lows. Well, technically got into that range ever so slightly by slightly touching that former high up here. But that might be all we get. This market has been full of these kind of abbreviated pullbacks or shallow pullbacks. In this case over here, the C wave didn't even make a new low on this fourth wave back here. At least this time we've actually at least made a new low on the C wave, which adds confidence to the pattern. But yeah, I just want to point that out. Now, if we look at some relationships between A and C, so this was the 618 relationship, and then we got very close to the 786 relationship, and then bounced up pretty strong. So it might not even happen getting down to this equality relationship, which would be nice. But just because it would be nice doesn't mean you're going to get it. Again, this market, many times already this year, since those March lows, we've seen these kind of abbreviated C waves or even failed C waves, where it just doesn't go down as much as it normally would because there's just so much, buying pressure every time. There's just so much dip buying on any sign of weakness, and that's really a sign of a strong market, whether you agree with the reasons behind it or not. That's just the way the price is behaving. So yeah, this is SPX. I'll get rid of the equality and 618 relationship there for now and just leave up that 786. Now we'll go to the candlesticks later on, but this was definitely a reversal candle. If I switch to candles, you can see that was a potential bullish hammer reversal, and that may very well mark the low for this corrective pullback. But I'll get away from SPX here, and you can see we got down to just past the 23.6% retracement, which is a very minor fib retracement of this entire run up from the March low. So if we can't even get down to a 38.2% retracement, I mean, this market, it's got a lot of strength underneath, and it's probably going significantly higher as time goes on, if these levels continue to hold. But so far it's looking like a buy here. Okay, now I want to get away from SPX because, and I'll just quickly show the NASDAQ composite. Same idea, working the ABC down. Of course, the NASDAQ, as usual, it's even relatively stronger. So the C wave for the NASDAQ here didn't even get to the 618 relationship for A and C, which isn't that surprising because the NASDAQ has been showing superb strength this whole time. So the fact that that's continuing isn't that surprising. And another thing, we'll go to the NASDAQ futures. So this is the NASDAQ 100 futures. And this, I think, shows the best detail as far as subdivisions as to what's going on. And really, if the NASDAQ resumes its bullish trend, you can rest assured, all the other majors are going to do the same. So might as well focus on analyzing the one that's really showing the clearest pattern here, because I think that's really what you can kind of rest your hat on there. Okay, so for NASDAQ, we got a clean on these NASDAQ futures, that is, NQ futures. Clean 1, 2, 3, 4, 5 down for A. This looks like, in retrospect, a nice flat correction. So A, B, C. It was actually a running flat because B made a slightly new low, but C failed to make a new high. So basically a flat though, but technically a running flat. ABC for B. And then potentially we got a little ending diagonal C wave here where it's 1, 2, 3, 4, 5, but it's not an impulse wave. It's actually an ending diagonal 5-wave move where 1's the longest, then you got 2, then 3 shorter than 1, then 4 overlaps 1. Instead of not having overlap, you're supposed to have overlap, and then 5 shorter than 3, and then you get the reversal. And you can actually draw, it's almost like a falling wedge, right? You can draw a little ending diagonal trend line. Let me just throw this up here, kind of like that. And then the 2 and 4 trend line, kind of like that. Get that little wedge action, and then you reverse out of it. So classical chart pattern you might call a falling wedge, but there is a proper Elliott term for it, ending diagonal. Or if it was going in a different scenario, it could be a leading diagonal, but in this case an ending diagonal because it's finishing the pattern instead of starting it. Okay, let me just put those impulse labels back up because I deleted those. So yeah, 1, 2, 3, 4, 5. Now, what I like about this NASDAQ futures chart and why it's fairly convincing that you know, the bottom was put in today, at least on these NASDAQ futures, which would probably translate to SPX and certainly the NASDAQ composite and the NDX, the NASDAQ 100 cash index, and probably lots of other things too. But what I like about this, if I go in on the 5-minute chart, and let's just go look, and this is starting from the absolute low of today, so the low of this entire correction so far, I can get a nice clean 5 waves up off the bottom. So you got a little 1, 2, maybe we'll call that 3, ABC expanded flat 4, 5. So that's your initial, and look, no overlap between 1 and 4. That respect, even on these NASDAQ futures, as volatile as they can be, no overlap between 4 and 1. So that's your initial 5 waves off the bottom. That kind of got my attention. And then, okay, after 5 up, you expect a little setback, pullback. We came just down past the 50% retracement, in between the 50 and 50% and the 61.8% retracement. So let me just delete those other ones for clarity. So nice fib retracement. Also looked like a little ABC down there, right? So we had ABC down, nice 3-wave decline after 5-wave move up. And we'll drop the degree down here a bit since we're on the smaller time frame. So we got 5 up, 3 down, and then okay, after that you're looking for another impulse wave up. Well, and it looks like on the larger degree we probably got the initial wave 1 up, wave 2 down, wave 3 in progress, get a 4 or 5, etc., etc. So kind of a new trending move kicking off here. So that's really what grabbed my attention as far as you know, potentially having a real bottom, tradable bottom as of today's low because of this short-term impulsive looking price action. Okay, so nice reversal off the lows. Looks like an impulse wave starting off the lows even on this 5-minute chart. So I like that. So go back to that. You know what? I'll just, now that I showed you this short-term action, I'll just delete these smaller degree labels. Go back to that 4-hour. So if you want to wait for more confirmation, you'd wait till it breaks out the channel, or even better, get above this kind of previous resistance area in the mid 11,000s. But to me, that's enough of a short-term signal to try and get in earlier, right? So I've tested the waters. Didn't go huge, but started an NQ futures long position, and perhaps I'll add to it on further strength, further confirmation. But right now, stop goes against the existing low of the day, and that was, let's see here, 10,656. So just under that level would be your stop if you want to try and play that. And also I'll point out a nice little bullish divergence on this 4-hour RSI here. So you see the A wave got nice and oversold. We had our B wave flat. Now we've gone down in C to a lower low in price, but a higher low in RSI, and now reversing. So a lot of things kind of adding up here, making me think we got a nice entry here for a long position. Okay, so that's all I really wanted to show on the NQ futures. Just classic ABC zigzag down, potential ending diagonal wave C, and a nice impulsive looking reversal, at least short term, off the low of today. So that's that. Now let's go over to the Thinkorswim candlestick chart. And this is the SPX daily candlestick chart. Now you can see we did a hammer reversal candle today. We are below the 50-day moving average. but we're above the 200-day. I mean, you know what? It's nice when things, you know, line up and bounce off the moving averages, but they don't have to. I mean, just because we're in between the 50 and the 200 doesn't mean you have to go down the 200. Now, if we do go down to the 200, that'd be a little surprising given the current kind of reversal action that we're seeing. But that's probably a pretty solid area to look for a reaction if it gets down there. But I'm kind of doubting it will go there at this point, based on what I'm seeing there on the NASDAQ. So we have a bullish hammer reversal. Nice little gap down that's not filled yet. We also have a gap up here. So we have two unfilled gaps above us and a reversal candlestick. So I'd say we're probably going to go fill these gaps before too long, and then probably continue up to higher highs. The implication, of course, of this three-wave decline is that it'll be more than fully retraced to the upside. So the implication is that we will take out the former highs. Now, I'll caution, this seems like a very short correction in time compared to this previous run up. So maybe this is just the initial ABC down for a wave W. We'll come up, you know, pretty high in an X wave, and then one more wave down in a wave Y, like a double zigzag, for instance. Some sort of more complex pattern. But as it stands right now, we just have a simple ABC zigzag down, and until there's any reason to treat it otherwise, I think we'll just go with that. And obviously, if it just kept tanking and breaking down, maybe this wouldn't be an ABC down. Maybe it'd be a 1, 2, 3 down in progress. But currently, that's just not what it looks like at all. It looks very much like a classic ABC down. So that's really what I wanted to point out there on the daily candlestick chart on SPX. Looks like a buying opportunity. Oh, yeah, I guess if you're trading the S&P futures or an SPX product or whatever, stop and go below today's low on those as well. For me, that NASDAQ just looks cleaner and, you know, just a tidier setup, but basically the same implications, right? If the NASDAQ complete its correction is going to go up to new highs, then you can bet SPX and a lot of other things won't be far behind, right? Okay, so that's SPX, Dow Jones Industrial Average. Same idea on the Dow. We got three waves down, ABC down. Dow is certainly closer to its 200-day, but again, there's no reason that we actually have to go and touch it. We did get into this previous corrective zone of the Dow, more so than we did on SPX. So that's fine. And not the same kind of reversal candle today on the Dow, but certainly a long lower shadow rejecting those lower prices of the day. But I'm not trading the Dow here, but if you are, same idea, stop below today's low. Or if you're trading the Dow futures, stop below today's low. You know the drill. Okay, now NASDAQ Composite. You can see the NASDAQ Composite very strong today considering what kind of day it was. It was down earlier, but you can see it closed almost flat, you know, down 0.13%, so essentially unchanged considering it looked like such a bearish day, at least earlier on. So what I'm thinking here, yeah, ABC down for the NASDAQ Composite, probably got our bottom there, and that's a nice reversal candle. Probably heading higher here, as long as we don't take out today's low, right? It's nice when you can define the thing by just a single day's price range. That's a pretty nice setup. Okay, so that's the composite. Now, to add to all the other stuff, I think VIX is telling us that, okay, that was probably it, or almost it. So VIX rejecting those higher levels of the day, and importantly, VIX continuing to make lower highs from previous VIX highs. So that makes me think that this is so this was the VIX high on the A wave, now this is the VIX high on the C wave, comparing to the indices making their A and C waves. If this was a third wave, you'd expect, like a third wave down on the indices, you expect VIX to be making much higher levels and spiking beyond the prior levels, but in this case, we're making lower highs on VIX, so that's bullish for the market, and we're still below the 200-day simple moving average on VIX. That's also fairly bullish for the market. I guess you could call this an inverted hammer on VIX if you want to do a candlestick pattern on the VIX, which I don't necessarily believe in, but just to point it out. Now, to the VIX VVIX tool. Okay, so what I want to show here. Oh yeah, so there was a nice VIX VVIX divergence back here. Then VIX got above the red moving average. Of course, SPX was already going below the blue moving average. That was just kind of confirmation that some more weakness was coming. This was back when we were still in this kind of a flat B wave correction. So we got the A, we got the ABCB, and then the C wave down, right? So that was a nice little heads up that there is at least a short-term downside opportunity. But I believe that is past now. It looks like we're coming up, right? And I'll point out, okay, so we made lower lows on SPX, but look how much we're below those previous highs on VIX. So I'll do a big divergence kind of a demonstration here. So VIX and VVIX making significantly lower highs from their previous spikes up there, while SPX was making lower lows. Okay, so that's a bullish divergence. So even though the price of SPX was making a lower low, the volatility complex was not, and that's telling you that the fear is coming out, the hedging is coming out, and basically the big money is preparing to go long again. That's what it tells me. And it looks like that is in its early stages of kicking off here as of today's reversal. So just thought I'd point that out as well. And yeah, that's probably good. I'll just clean up that larger divergence there. So bottom line, long against today's low, particularly on the NASDAQ 100 futures, NQ. And this will probably mark a nice reversal for many individual stocks as well. Again, I'm not going to make these videos all the time, but when I see something worthwhile that I think is worth pointing out, I'll do it, and that was the case today. So let's see how the rest of the week goes, and that might have been the extent of this pullback, and this extremely bullish market may already be getting ready to resume its strength. All right, Serial Trader signing off.